What if I told you the world's biggest financial crises have created more millionaires and billionaires than almost any other time in history? While millions of people panic, lose their jobs, sell their investments, and struggle to survive, the wealthy often become even wealthier. Why? Do they know something everyone else doesn't? Do they have a secret strategy? Or do they simply play by a different set of financial rules? The truth is, every economic crisis changes how money moves. Some people lose fortunes. Others quietly build them. In this video, we'll uncover how the rich stay rich during every crisis, and what lessons ordinary people can learn from their mindset and financial habits. Let's begin. Most people see a crisis as the end. The wealthy often see it as a discount. When markets fall, many valuable assets become cheaper. Stocks, businesses, real estate, even entire companies. While fear pushes many people to sell, experienced investors often spend their time searching for opportunities. They understand something important. A lower price doesn't always mean something has lost its long-term value. Sometimes, it's simply being sold because people are afraid.
One of the biggest differences between successful investors and everyone else is emotional control. During a financial crisis, news headlines become frightening. Markets become unpredictable. Social media spreads fear. Many people make emotional decisions. They sell at the worst possible time. The wealthy usually avoid reacting to daily headlines. Instead, they focus on long-term trends. Because temporary panic often disappears. But permanent mistakes can last for years. Many wealthy individuals prepare long before a crisis begins. They often keep cash available. Not because cash earns the highest return, but because it gives them flexibility. When opportunities appear, they can act quickly. Imagine finding your dream investment at half its normal price. Without available cash, you might miss that opportunity completely. Cash isn't just protection, it's purchasing power. Many people rely on a single paycheck. The wealthy usually own assets, rental properties, businesses, stocks, index funds, intellectual property. These assets can continue generating income, even during difficult economic times. The goal isn't simply to work harder. It's to build systems that continue creating value. Every crisis changes the economy. New industries emerge. Technology evolves. Consumer behavior shifts. The wealthy constantly study these changes. They read, research, analyze markets, learn new skills, because knowledge helps them adapt. And those who adapt often recover faster than those who resist change. Most people measure success by what happens this week or this month. The wealthy often think much further ahead. 5 years, 10 years, sometimes even generations. They understand that markets rise, markets fall, but over long periods, strong businesses and productive assets have historically continued creating value. Patience becomes one of their greatest advantages. Perhaps the greatest difference isn't money. It's mindset. During uncertainty, most people ask, what if everything gets worse? Successful investors ask, what opportunities exist because everyone else is afraid? That single question can completely change how someone responds to a crisis. Fear creates panic. Preparation creates opportunity. Every financial crisis eventually ends. But the decisions people make during those difficult moments can shape their future for decades. The wealthy don't control the economy. They don't predict every market movement. But many prepare, stay patient, continue learning, and focus on long-term value instead of short-term fear. Because staying rich often has less to do with avoiding crises and more to do with how you respond to them. If you enjoyed this video, subscribe for more finance, investing, and wealth-building content. And tell us in the comments, if a major financial crisis happened tomorrow, what would be your very first financial move?